My take is the numbers were decent, and I think they were honest about their results, which were pretty good, but not, the blowout results expected for such a high-priced stock. And a pullback is warranted and necessary. I don't see this as a negative in any way. I know everybody likes to get hysterical and say, oh, my God, the stock's down 50, but the stock's actually up 150 points from January. So let's keep that in perspective here. Netflix is doing phenomenally well as a company, and yes, they have increased competition.
Yeah, I mean, good call, Matthew. You downgraded the stock, today? To underperform?
Today, correct. Yes.
So was this the sort of slowdown in subscriber growth you were looking for?
Well, it was really a function of the stock price going parabolic, year to date. We had a buy on Netflix earlier this year, and we love the business model. It's a great company, amazing execution. But, frankly, for even to get to our 330 target, the stock has to get to over 400 million global members toward the end of the decade with a huge improvement in margins. So, love the business, kind of hate the stock at the level it was at least until the earnings this afternoon.
John, with the subscriber game and the expectations game, always high when you have a stock up 108% for the year to date ahead of earnings. But the fact that the company missed its own forecast on subscriber growth in the U.S. and the world, does that raise questions?
I think it does. And they missed it by 1 million. Roughly, really,
so
is what he said.
Maybe harder to see into.
Well, and this is where we have Reed Hastings saying, hey, we strive for accuracy in this, and we expected it to be a subdued quarter, and having explanations around it. But I think what it really calls to is there's this choppiness in Netflix. And so how do you tell a growth story, a story for a company that's sort of striving for global media domination? Not saying there isn't room for other players. They very specifically called that out in the letter this time. But to be the strongest player, the one with the boldest ideas, the one with these big investments, how do you do that and then explain this choppy subscriber growth at the same time? What are they going to do to either even that out or give analysts better data to be able to make more accurate estimates about what's going to happen?
Well, Ross, so the subscribers missed a little bit, but revenue is still up 41% from a year ago, and the EPS is up about 450%. In fact, the EPS was quite a nice beat, 85 cents versus 79 expectation. When does this company start trading off those numbers as opposed to the subs growth? Is that still years away?
Well, I think they kind of are trading off those numbers now. It just has a ridiculous multiple, and having it contract a little bit as it's doing today is certainly healthy if you want to be a buyer of this company. But as an investor, we're looking at over the next 5 or 10 years, and Netflix is the #1 service that every single person uses in general and probably across the world over the next couple of years. So we're not concerned about the business. We love the way the numbers are trending. And the only issue anybody has with the stock is the valuation. And since I've been in it for, 2-3 years, I'm not complaining. We've made a lot of money. It pulls back a little.
So, Matthew, what does it say to you that from the shareholder letter, they specifically call out the new combined AT&T Time Warner as a competitor, combined Fox Disney or Fox Comcast as well? How does that threaten a Netflix?
Well, I think some of the competition is only going to increase going forward. I think HBO had very poor execution with HBO Now on the streaming quality of service. I think AT&T will be manic about fixing that, as well as increasing the quantity of the shows produced. And then certainly, Disney Fox is entirely nascent, so that's not going to hit Netflix for another couple quarters. One thing I would worry about, maybe not globally, but in individual markets like India, Germany, you're getting a lot of very good competition, and in some instances, new competition like ProSieben, Discovery coming on with sports in Germany. So I think that they're really in a bit of a honeymoon right now before things really, heat up over the next, say, 2 or 3 years. But this is a great company, a great business. I think the stock just got parabolic and a little more than a little ahead of itself.
Matthew, you downgraded the stock this morning. It's down 13% to 346. How much further would you need to see it decline before you recommend a buy again?
Well, we've got a price target of 330, and of course, I'll be reassessing the numbers after the call. But again, even my numbers have them getting to over 400 million customers at the end of the decade, and that's a lot of wood to chop. So, honestly, I think the stock overreacts to these quarters. The stock could be up 13% right now, and I could be looking like a donkey. But, I do think that they have a good challenge ahead of themselves.
John, quick final thought. All of FANG is down right now, not to the tune of 13%, but about 1% or so or more decline in the other names. Does that make any sense whatsoever, that read across?
I don't know if it makes sense as a read across, kind of looking at Netflix and then at the rest, but I do think, look, as I said in the beginning, Amazon and Netflix are the high flyers valuation-wise of this group. To Netflix, this subscriber miss doesn't mean a whole lot, so they're back to May levels, which were pretty strong to begin with. They've grown more than 100% over the past 12 months, but it might mean more to just the overall valuation story outside of Netflix. It might cause some investors to think,
just like,
okay,
hey, we've gotten ahead of ourselves on this one. Where
if
else have we
Netflix
been
can't
buying?
do it, then who else maybe can't do it? And do we need to reassess this?
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.